we start the show here with a summary of what I saw happening, and we saw happening this week in the stock market. A big piece of investing is really, being able to kind of understand what's going on, have some familiarity, so you can figure out what you need to do for the most part, right? And so, if we go to our little chart here that we've been working on, I've been building. This is week by week data going back to 2018 timeframe. And market's doing well. At least this week we're up. We're up today. So if it holds up, we'll end up this week. Last week we were down, right, on the S&P 500. We haven't recovered all that. Uh,
Yeah, even though it's been a pretty volatile week, the
yeah.
week is pretty even.
Yeah, it's been kind of wild because I wear a green shirt on Monday. So I wear, different colored shirts on the Monday through Thursday videos, depending on, what the market did that day. A green shirt means that it went up 1.5% or more. A red shirt means that it went down 1.5% more. And I wore a red shirt yesterday. So, yeah, it's been, kind of volatile. Although, uh, not to be unexpected, honestly. We've had a big run. You come out of this, Liberation Day and the pause on the Liberation Days, tariffs, and the market has been really on a tear as far as that goes. So, I'm not too worried about what's happening here in the short term, at least so far, as far as that goes. So, now, one of the things that has happened this week, and I think it's really even going back to next week or last week, was just the fact that, you know, we're seeing some weakness in the job market. There's no doubt about that. Matter of fact, last month in October, we had 153,000 layoffs, which is the highest 1 month total we've had in the last 22 years. So we don't have a lot of other data coming from the government because of the shutdown. Some of that data apparently isn't going to come at all. Some of it is. So we'll have to see what happens. But, we've got these other private data sources, including this, number of layoffs, and the market's been kind of struggling with that ever since. And then at the same time, you had a situation 1 month ago. And I'll show you the chart here. Oops, not working now.
Right,
Oh,
but yeah.
turn it on. Yeah, a month ago, where uh, the expected rate cut in December, right? So we had a rate cut like was expected in September. We had a rate cut like expected in October, and then we were supposed to have one in December, according to the market. So this is the CBE, CME, groups Fed Watch tool, and this was prior to this 1 month ago a 94% chance of a rate cut, 4 point, and now we're down to a 46% chance. Right, that's a huge differential. So the market is factoring in these rate cuts, and part of the gains that are coming prior to those rate cuts is the guess that we're going to have those rate cuts.
Yeah, they're trying to take a risk off sentiment.
Yeah. And so when those rate cuts look like they're not going to happen, the market is going to readjust back down. Um, Now, with one caveat, and that is if the market feels the Federal Reserve is wrong, then you'll get an even bigger move.
Hmm.
Because if the market feels like, oh, the Federal Reserve needs to cut rates, right? And they're not going to cut rates potentially, then, and the unemployment market is falling apart, and maybe the parts of the economy is starting to happen, those types of things. And so if they're too late for it, you could cause a recession or make it, if we're going to have a recession anyway, make it deeper. And so one of those two things is happening because what's going on, and the reason, because there's no real change, there's no real data that says they shouldn't do a rate cut in December, right? Because all the data we've seen for, because they have a dual mandate, full employment, right, on one side, and 2% inflation for core PCE index, right, year over year. And right now, the job market is getting soft. Unfortunately, core PCE, as we'll see here, is going up. Now, we're back to where we were at the beginning of the year, which I think needs to be talked about too. So, however, the trend is troubling, and that's what the Federal Reserve is talking about. It's why they're coming out like yesterday, multiple Fed governors saying they don't think a rate cut in December is, guaranteed. They're not saying they're not going to do it, but they're definitely not saying they are going to do it. And actually, Chairman Powell, in his press conference right after the last rate cut, said that December was definitely not, a guaranteed rate cut, and the market had already started to adjust to that. But, what's problematic here is the trend, right? So we hit a low. right before or right after Liberation Day,
Mhm.
and now we're starting to see those tariffs slowly but surely coming through to price. Um, I'll make a little bit of a comment here. I think it's kind of interesting because one of the things President Trump keeps talking about prices coming down. He talked about it during the campaign, and he's talking about it now. And of course, for the people that are going to the grocery store, they know prices aren't coming down.
Y
But the reality is that price as a whole rarely ever comes down. So
You
that's a
break the
different
market.
thing. Yeah, usually when it's coming down, things are falling apart. It came down in 2008, 57% stock market drop. People weren't buying anything. Dealerships, car dealerships were empty,
Mhm.
all of those types of things. So when prices are coming down historically, it is because of, some calamity. Now, individually, like eggs have come down, but that was because there was this big bird
Shortage,
flu
yeah.
shortage, what have you. Gas prices, it keeps talking about been coming down nationally. I think they're a couple cents lower than they were at inauguration day. So the problem is that if you're gonna tell people prices are coming down, you're never gonna win that argument because it's up 3%, even if it's up 2%, which is the target for the Federal Reserve, it's still up.
Yeah,
So it's just a matter of it's not about deflation, prices coming down, and promising people that prices are gonna coming down is gonna come back to haunt you because it's almost impossible to do.
yeah, easier promise would be saying that your wages are gonna grow
Yes.
and then prices are gonna stabilize.
Yeah, exactly. So maybe we get back down to that 2% growth in inflation and you're gaining, on wages 4% or something on those lines. That's exactly right. And that's more accomplishable.
Yeah,
It's almost impossible to run around and say all the prices are going to come down. It's a good campaign piece, but then when you actually have to execute it, it's
it's
very, very
hard.
difficult. Yeah. Um, uh, so that's kind of what the Federal Reserve is looking at. They're looking at these. This is the slow growth of that overall prices to the consumers as the increase in tariffs starts to become more and more of a consumer cost and less of American company cost.
And we still have a long time towards the meeting. The meeting is not till, I believe, December 10th. So
Yeah.
we're still well away. So more data will come out now that the government's been reopened. There will be data coming from the government.
Yeah, because we've got the September jobs report, the October jobs report. They're saying that they're only gonna put out portions of those, not gonna include the unemployment portion. But we will have a November jobs report, I believe, before December 10th. I could be wrong. They usually do that big jolt report early in the month.
I don't know about CPI. What would be
CPI is usually later, like the 12th, 14th, but it depends. So they might not have that. So it'll be interesting. I don't know that that helps or hurts. It's hard to tell. The Federal Reserve probably does have access to a heck of a lot of data outside of what the Fed government puts
Yeah, it
out
looks like CPI is supposed to come also on December 10th.
on December 10th, the day they're doing it. So unfortunately, well, December 10th, that could have an impact 'cause is the 10th a Tuesday?
I believe
Is
so.
that the first day? Because they meet on Tuesday, Wednesday, and then they announce the rate cut on Wednesday, and if Wednesday's the 11th, so they'll have the CPI during their meeting, which would be
No, December
interesting.
10th is the Wednesday.
Oh, on the Wednesday, okay, so that won't help, sorry. Anyway, interesting to see how that plays out, in terms of a rate cut. I'm sort of I look at kind of the softness that's happening, and I wonder about the rate cut. I mentioned this week, just because when we look at the labor market, does a rate cut really help? Because the main reason, that they're touting, the 2 main reasons that they're touting for higher unemployment or the number of layoffs we had in October are twofold, maybe threefold. Number 1, companies are spending money on AI, and they don't wanna have lower overall earnings, so they're cutting back other costs, including
Mhm.
labor, right? Number 2, companies are spending money on tariffs. They don't want to pass all of that through to the consumers, or maybe they can't, so they're having to eat some of that. So they still want to have increasing earnings, so they're cutting on labor, right? And number three is artificial intelligence. Whether it's ready right now to take over jobs, it's probably already enhancing productivity for those people that are there. And obviously, the thought process going forward, if you look at most of the company plans, like Amazon's talking about eliminating a tremendous number of jobs, trying to use robotics and AI and those types of things. Not that it's here yet, but
Mhm.
it's something they're gearing up for. So AI spending, and tariffs. So if you lower rates another quarter point, how does that help unemployment? because it doesn't really change the AI spend, which is really driving things, right? And they need that money. It doesn't really change the tariffs, at least on the, the standpoint of what's happening with the
Mhm.
economy as a whole. And it doesn't change, the whole employment picture. So that's why
Yeah, is it
you're
enough?
pushing on a string.
Yeah, is there enough impact if there's interest saved, basically? If they're using debt to kind of finance these spends,
Yeah.
is there enough to
Yeah.
augment that?
Yeah, we're seeing some debt in it, that's for sure, but there's so much private money still sloshing around chasing after the AI. But, are they using debt to fund the payments to tariffs? Probably in some cases, who knows? But yeah, overall, theoretically, it stimulates the economy. It would make more money available. But I think there's an interesting correlation between what's happening here and what the Fed can actually do here. Everybody looks at the Fed like they're this all-encompassing thing, but they can't always do what they need to do.
Yeah, but they have a hammer and they may need a screwdriver for the
Yeah,
situation.
exactly. It's good. All right, just the last point here is just, where are we in terms of this overall run as far as that goes? I feel pretty good that we're not done. I think, the dip buyers are still there. And one of the things you do see is just the number of days since the last 5% pullback, right? So the little triangles, the purple triangles there are all, historically how many days we got to. So the big one there in 2017 looks like a little over 400 days
Yeah.
before we ended up
Mhm.
with a 5% downturn. Very smooth market. Um, we had a really good one going here just before Liberation Day, and you can see that. But where we are right now is actually not that stretched out in terms of just how that market is going. We are stretched out on valuations. There's
Mhm.
no doubt. But in these particular markets, I'm telling you, valuations aren't as important as they will be when things start to fall apart, right?
Yeah,
And
a lot of
so,
people have been using the Greenspan phrase, irrational exuberance.
yeah, yeah, actually, yeah, and again, he had a lot of great quotes too. The market doubled after he said that. That was in '96.
Yeah, and so the
Yeah,
market can be irrational longer than you can stay solvent if you start shorting the market.
yeah,
That's a thing
exactly.
that's gone around quite
Yeah,
a bit.
exactly. Yeah, you have to be Michael Burry, that kind of capital to kind of hang in there, and that kind of fortitude to short Nvidia and
Mhm.
Palantir and such. Probably makes money on it if it happens within the next couple of years, because they use so much leverage. They can lose a lot, but then their gains are so high it kind of pays off. So we'll see how that plays out. But that's kind of what we're seeing here in this particular market. I still think the momentum's there. We're still in a primary direction up. That we haven't broken into a lower low,
Mhm.
in this uptrend. Haven't really even got that close to that, to be honest. We have not had even a 5% pullback. We are above the 50-day moving average. We're above the 200-day moving average, the 50 days above the 200. You name whatever part of the checklist you have for primary direction. Right now, the primary direction is up, and nothing is really changing that here in the short term, in my opinion, outside of just, we've seen these outside influences like, hey, we're going to double the tariff on China or go to
Mhm.
100% more or whatever it is. The market's going to struggle with that. And, eventually that gets worked out. We did see something interesting today yesterday too. They're talking about cutting the tariffs on bananas, coffee, what was the other? Oh, beef. Um, and so, they're acknowledging the increasing costs in those particular markets. And I think the beef is actually not so much tariff related, not that it won't hurt,
Mhm.
it might help, but nonetheless, we can't make bananas and we can't make coffee beans here. I, I don't know if it's still true, but coffee was up 21%, the last report that I saw. And so when you're tariffing, a country like Brazil, for example, at 50%. So they might exclude coffee. And so this is what the whole market's been waiting for is this chickening out thing, which isn't really chickening out. Well, I mean, honestly, in the first place, there shouldn't have been tariffs. There should have been, shouldn't have been there for those particular issues, in my opinion. But at least they're making those adjustments when they see things not working. And that's what the market has been relying upon. It's like, okay, when things start to fall apart, they can make these adjustments, and Trump has shown more than enough willingness to kind of make these adjustments, and he's not afraid to do those things. And they made an adjustment to China. China's tariffs are now lower than they were at the start of, not the start, but you know, than they were certainly after the first set of negotiations that
Yeah.
were done, finished up in Spain, for example. It's lower now after this last go around. So and I actually expect that'll go lower again. China will continue to use their leverage on rare earths and different things and slow walking, their soybean purchases or whatever they need to do. They're have a long-term outlook on it, and I bet you they get that tariff down even farther just because, again, they have so much leverage. But anyway, so that's what's been happening this week. Is very interesting markets. I still think that there's some room to run here. Maybe not a ton. We'll see how that goes. But we haven't gotten to the end of this particular top unless something truncates it from an outside, situation, something crazy, which is always out there, no matter what market you're in, as far as that goes. So, anyway, look forward to talking about this again next week, and so feel free to send in any questions.